Hello guys, welcome back to another video. Today's video we're gonna break down my personal blueprint that made me pass lots of evals, that made me achieve multiple payouts and taking multiple payouts from multiple prop firms. So the blueprint is very simple. It's based on ICT, liquidity sweeps, and the market structure shift. So we have two types of setups. I'll go through it very quickly so we don't make the video as long. Okay, so the key steps that you're going to be waiting for is actually 6 steps every single setup, and either one of the two setups is going to be forming right in front of you, and then you're going to be wait for your entry, take it, execute your edge, and then pass your first funded, take your first payout, and then go enjoy your life. So the first thing is going to be marking out the liquidity, which is going to be identifying the pools above and below the swing highs and the swing lows, and then waiting for the market to manipulate right into this liquidity pool, taking a liquidity sweep, hunting that liquidity, and taking the inducement liquidity. And then right after the liquidity sweep, you're gonna look for a market structure shift. Okay, so with that being said, these 3 steps are fundamental before you look for a trade. So whenever you see this happening into the market, following your bias, you're going to be waiting for either one of the two setups to form, so you're going to be entering your trade. So the first thing is going to be 50% retracement and an inversion or a CISD forming right below or after the 50% retracement, which is going to be the discount and the premier zone, and then you're going to enter the trade. The other setup is going to be retesting that order block after the market structure shift, and then making a breaker structure. This breaker structure is going to be the confirmation of your entry. Okay, so key reminders: follow the liquidity, wait for the market structure shift, take the 50% retracement, and enter on the inversion fair value gap or the order block or the CISD, or even if an SMT divergence formed, then you're going to be entering at the same thing, and confirm that trade with another breaker structure in your move. Whenever you see a breaker structure, the market does not have to go again below the 50%, so you're going to be placing your break even on your trade. So let's jump on the charts. Okay, so on the 1 hour time frame, we could see that the market is from the side. Okay, the market is in a obvious downtrend. Okay, so our bias is going to be bearish. Okay, if you open the daily time frame, you'll see it's making continuous lows. Okay, so with that being said, let's jump into the 5-minute time frame to identify what are we looking for. So now it's a Monday where we are waiting for a liquidity sweep or whatever. Okay, so we have the liquidity sweep, okay, following a market structure shift above the swing high, testing 50%, taking the inversion, making a CISD. You could enter the trade right here, placing your stop loss right below the CISD low, not the actual swing low, because this is not, again, a inducement, and then targeting this internal liquidity and targeting the external liquidity, and then GG's, you have a 13 risk to reward ratio trade done. Okay, but this trade I did not personally took because this happens in Asian session, and I'm usually asleep in Asian session, so I trade New York and London. Okay, so New York happens to give us a Drake candle to the bullish side. This was the CPI, as I remember. Okay, we sweep the liquidity of multiple equal highs, which is going to be engineering liquidity, as I described in the last video. Okay, and we have a massive gap here, which has a lot of liquidity as well. So we have the liquidity sweep above these things that we're waiting for, and actually our bias is bearish. So that trend that formed from here to here was a trade that I would not personally call it an A+ setup. A+ setup follows the high time frame bias, which obviously the last trade that I show you guys was not following the bias. Okay, so let's follow the bias. Let's wait for our setup to form, and then we're gonna enter the trade. Are we entering a sell here? No, we are waiting for the market structure shift. Now with that being said, this is the high, the low that made this high, because look, this high is above this high, so the swing low is already taken out. So this low, so now we have the market structure shift. Now it made the low already, so let's mark out the 50% retracement and the optimal trade entry. Okay, so the optimal trade entry is right here, and the 50% is here at 60. Okay, the market makes a high. Okay, and then after the high, what happens? We do not have a market structure shift. This is not a swing low. This is not a swing low, but this is a swing low, right? So now we have another market structure shift to the downside. Okay, you could take a trade whenever the market comes to your point of interest, retesting that 50% retracement and redeeming liquidity above that high and redeeming this full fair value gap, forming you a CISD and inversion fair value gap. As you can see, you enter on the inversion fair value gap, placing your stop loss right below this high because this is what formed the inversion fair value gap, and targeting the last low as an internal liquidity and targeting this as a external liquidity. GG's, you've done a risk to reward 1 to 8 trade. Okay, now with that being said, let's jump into the next trades. Okay, so the next trades, we have a swing low, swing high, swing low, swing high, swing low, swing high. Okay, and this are not that powerful swing lows. These are equal lows, engineering liquidity. Now what happens right after? We have a big liquidity sweep, redeeming all this liquidity. Okay, so we have all this liquidity being swept. Okay, and then what happens right after? So identify the high that made that low, which is going to be this high. Okay, so this high, we have a market structure shift. So with that market structure shift, you mark out this low and this. So now we have the 50% retracement you're reading for, and you have your optimal trade entry. So with that being said, the market tends to come back and retest your 50% retracement zone and then takes out this inducement liquidity, touches that fair value gap. No, it did not, but it did touch your point of interest, which is going to be the optimal trade entry, makes you a beautiful inversion fair value gap. You wait for the market to touch in that fair value gap, placing your stop loss right below this, and then targeting. First target is going to be internal liquidity, and second target is going to be external liquidity. GG's, you have done a risk to reward 1 to 4 trade. Okay, now this is pretty lovely. This is pretty dope. Okay, now let's say that you have closed your trade whenever. Okay, and then after that market structure shift, you see the market tending to, after the market structure shift, what happens? So let's say we close the trade here on a risk to reward 1 to 3. After that market structure shift, what happens? We have another 50% retracement, a liquidity sweep of this fair value gap and this inducement, and then the market is making you strong CISD, which is going to be the change in state of delivery, the target that we are looking for. The market redeeming this fair value gap is going to be the loveliest thing you'll ever see in your life, targeting out this liquidity as well. Very lovely. Risk reward 1 to 7. Okay, now if you are risking 1% on each trade that we have shown you guys, then you would have done until now around 30%, passing your eval, passing your funded, and then taking your first payout around 10% or 15% profit. Now what's preventing you from taking out these trades is actually not waiting for the setups to form. Now I am not looking for the baby breakers or even the setup 2. I'm only looking for the setup 1. Again, memorize this. This is going to be the blueprint that you're going to be testing out 100 trades from now, testing out the risk to reward ratio, testing out the win rate, and then seeing whether it comes in your favor and not. And promise you guys it's going to come in your favor, because this is what made me funded. This is what made me grant lots of payouts. Okay, I hope you guys enjoyed this video. I know it was short. I was trying just to break down to you my blueprint and how to implement it right in the market, and then I'm 100% sure that I'm going to be going out live on YouTube, TikTok, just to take live trades with you guys. The only disadvantage that you will see in this setup is it's not forming every day. Some days you will see it forming 3 or 4 times per day, and you're only needing to take only 1 trade per day. But let's say you take those 4 trades, you're having at least a 10% increase in your account just in one day. But okay, some days you are not going to see this setup being formed right into the market. This is what the test, this is what the real test comes. You are not seeing this setup, but again, you are entering trades. You should stop doing this habit. This is what's killing your gains. This is what's making your discipline listen. This is what's making your account grow smaller. Wait for the market to come to your 50% retracement, take your entry model, place a break even whenever a breaker structure happens. GG's, you have the ultimate setup that is super simple, super easy. And if you guys do not understand what liquidity is and how to identify types of liquidities, make sure you go to the last video that I've uploaded. I pretty broke down 80% of the liquidities that you're gonna be waiting for it to get swept. And that's it, guys. I hope this video explained it all to you. See you in the next video.